Good morning, Quasar Markets Live. It is Thursday, February 19th. We've got economic data coming in, jobless numbers coming in. So far, it looks like jobless numbers a lot less than expected. I think that's going to put some weary eyes on this data. Do we trust it or not? I was watching here to see if yields were going to move quickly as this happened. And they have had a little bit. You see volume stepped in right at that 8:30 mark here. And they are up slightly from where they were at 4.1 on the 10-year. So we are seeing a little bit of a rise on our rates. Part of that is going to be yesterday when the FOMC meeting notes came out. There was a few participants that supported a two-sided description of the committee's future interest rate decisions. Some are saying higher, might be needed to keep this inflation, tapped down. So we'll see how that plays out here throughout the morning. As of right now, all three indices are showing a risk off into the open. NASDAQ down the most, down about 53 basis points here this morning at 24,821 right now. We did have a nice strong day yesterday on the NASDAQ. It was up about 75 basis points. So this hasn't given us a fully bearish engulfing candle, but so far, risk off as we start to look through tech at least. S&P, we see down 36 basis points. And similarly, right within the middle of the body of yesterday's move. So not really much of a tell there. The Dow is the one that had, or still pretty much does, has a bearish engulfing candle where we've actually seen a bigger pullback has been across the Dow so far today. If we keep our eyes focused on volatility also, VIX is back up above 20. It seems like rhetoric has sort of dropped down a little bit this morning. Yesterday, as the markets were sort of ending, we got news that in Israel, they had sort of warned the IDF to be on high alert for maybe an attack. We had 50 planes sort of hovering throughout the Middle East. So I don't know if maybe they wanted to test and see what defenses or what, certain things, they look for a reaction to make their move. Maybe that's what they were doing. But one way or the other, we have tensions ratcheting up there. And we see that definitely through the gas and oil prices. WTI up almost 2.5% here, 66.36. And we can see it's the highest since July of last year here when it comes to our oil prices. Brent, same thing, up at around 71.20 today. Up 2.27%. Do want to keep an eye also the dollar, that does have the dollar moving a little bit to the upside again today. It butted heads up against the 50-day simple moving average and pulled back a little bit since that this morning, but that's what we're seeing there. And we do see a little bit of the metal hedge coming into play, although they're off the highs of the morning. Both gold and silver were up today, doing a pretty good job of staying within those tight ranges. Gold in between 4,900 and 5,000, and silver in between about that $70 and $80 range right now seems to be where it's settling in. Crypto not doing as well. We are at the lower end here, 66,130, so about halfway through the trading range we've seen over the last few weeks, where we hit a low of just below 60K, and then we bounced back up to 72 before pulling back. So, right now we're right in the middle, and it does look like we might try to test the lower ends here today if we don't start to see some inflows, especially into the ETFs are weighing on us. Ethereum, same type of situation, down at 1927. And overseas, China still, running to the upside today, up almost a half percentage point on the Hang Seng index. The Nikkei and the stocks are both down more than a half a percentage point here so far this morning. And as we start to take a look through the different sectors of the S&P, there isn't a huge amount of green. Energy seems to be a winner so far. And we did have Occidental had their earnings and an earnings beat that is helping with this situation. But again, if gas and oil are going to move, especially above the $70 range, then these things have room to run. So watch for energy as a sector today. Yesterday up almost 2%, up another 1.5% almost today. We do see utilities up about 30 basis points. They had a rough day yesterday. We'll see if they can bounce back today. Materials, technology, consumer staples, consumer discretionary, all negative in the pre-market. Outside of staples, all those that had a positive day yesterday. As we mentioned, tech was up about 1% yesterday through the XLK, but a little bit of a 30% pullback here on that percentage so far. Industrials being led by John Deere so far today. We'll get into that in a few minutes, up about 18 basis points. And we do see healthcare, financials, and real estate also slated to open up at least so far in the red. Taking a look from there at our Mag 7 look, what we can see is not a lot of strength so far. Yesterday the Mag 7 really led the way. It was a great bounce back day that led to the strength across the three indices. Today, Microsoft, the only one so far in the green, up about 11 basis points. NVIDIA had a strong day yesterday after the discussions that came out, the fact that Meta is partnering with them, buying a huge amount of the Blackwell and Rubens, and that had them moving yesterday, but again, pulling back slightly today. Apple's given back after a strong move up over the last 3 days, given back most of yesterday's gains so far. And Google, which has been under pressure, started to, bottom out, started to look like it was making a bounce back, but again, struggling here in the pre-market. Amazon had a strong day yesterday, finally bouncing back since their earnings. They've been in a lot of pressure, a stock that was trading as high as 258 a couple of months ago, got down as low as 196 before breaking back above the 200 level. I mentioned Meta yesterday announced partnership with NVIDIA. They are getting hit a little bit here today, down about 74 basis points. And today, quite honestly, it does seem to be, well, it did before all this economic data came out, it was all about the earnings reports, and they were moving names up or down. One of the biggest gainers this morning is RELY, Romeo Echo Lima Yankee. That is a Remedy Global Inc., a remittance company that moves money across the globe, a sort of replacement for SWIFT and MoneyGram and all those, up 20.7% here. They had a really strong earnings beat, and they just more of a story with them, quite honestly, that they just keep beating and keep moving that needle up in the right way. So they're up very nicely today, about 20%. DoorDash up 7.5% here, a nice bounce back. They have been on, again, a multi-week downward push. but they had strong earnings. Last night, they posted fourth quarter adjusted earnings and revenue that actually, this is a weird one because they actually missed revenue and top line and EPS, but the stock's moving up because of what they had to say. Earnings were up from last year's 33 cents a share. Revenue jumped 38%. Fourth quarter gross order value, or the total dollar of value of orders completed, rose 39%. So it came in above Wall Street estimates. And they also said they expect first quarter gross order value between 31 to 32 billion, which was a little bit higher than estimates. So again, planning out in the future or looking future guidance in there, that has people moving up. They did say they plan on investing several $100 million in more new initiatives and platform development in 2026. Some of that investment is planned for building autonomous delivery vehicles and updating the tech that powers their apps. They did point to longer deliveries and more complex deliveries as a little bit of a headwind in front of them. Another risk was their competition, Maple Bear, which is Instacart, Uber Technologies, and as Amazon.com expands its same-day grocery delivery, it's putting a little bit of stress. But so far, traders are liking what they saw out of DoorDash's earnings, and that does have them moving up nicely so far. Another one that's up on their earnings is eBay. And eBay actually is sort of a two-pronged catalyst this morning that has them moving to the upside. They are going to buy Depop, the secondhand clothing site, from Etsy for about $1.2 billion in cash. And they also posted fourth quarter adjusted profit that topped Wall Street forecasts on a revenue increase of about 15% to almost $3 billion. Their gross merchandise volume in the period rose 10% to $21.2 billion. So the online marketplace got boosted, and they are actually going to raise their quarterly dividend. And the board did authorize a $2 billion buyback program. So eBay, one of the big gainers, it had been up as much as 9, almost 10% in the pre-market before, pulling back slightly here. Other ones that had earnings over the week or over the last 24 hours, I should say, is Occidental Petroleum. Up yesterday around 2.5%, up another almost 5.5% today. They announced fourth quarter adjusted earnings that were better than expected, as revenue did decline from $5.64 billion down to $5.11, but their EPS did do better. And again, gas prices moving to the upside is definitely putting that in the right direction so far. Other earnings ones to keep an eye on today: Carvana getting hit pretty hard here. It was down even more earlier today. This is after they're down about 6.5%. After the used car dealer best known for those auto vending machines reported their fourth quarter adjusted earnings. They had earnings of about $511 million for the fourth quarter, below estimates by about $30 million. So a pretty decent miss there. Their total revenue was $5.6 billion, up 58% from last year and ahead of analyst forecasts. They're trying to maintain a rapid pace of growth while also expanding their profit margins, which has proven to be a little tricky at this time. They sold about 163,000 vehicles at retail. That brings their end of year total up to almost 600,000 cars, up 43% from 2024. And the retailer continues to gain a foothold in that fragmented used car market. So they are still a relatively small company in comparison to some of their competition, but moving up nicely, or excuse me, moving down on less than stellar earnings there. Others we're looking at today after earnings also. John Deere had an earnings beat. They are up about 5.8% here today. So this was a good one to see, a good talk on, the industrial sector, and one that, again, that we've been hoping to see that is some of this, make Build America and all this starting to work. So maybe we are starting to see some of that work out its way. The company that gets most of its revenue from farm equipment, as we know, saw EPS of about $2.42 from equipment sales of $8 billion. So they did beat on both their EPS and top line revenue. Their sales expanded in all three segments: their large agriculture, their small agriculture, and their construction and forestry divisions all showed expanded growth in the last year. And they raised their fiscal 2026 net income guidance to 4.5 to 5 billion. And that means the low end actually is up ahead of where they were projecting before on the high end. Good morning there, Zora. Hope all is well. And they said, while the global large agriculture industry continues to experience challenges, they are encouraged by the ongoing recovery in demand within both the construction and the small agriculture segments. The CEO, John May, said these positive developments reinforce their belief that 2026 represents the bottom of the current cycle and provides us with a strong foundation for accelerated growth going forward. I did look to see if they mentioned tariffs in any way or anything there. They really didn't have anything there. So we'll keep an eye to see if that does move the needle, from that. Another company that I am normally a fan of, but who got hit pretty hard here this morning on the downside, is Cheesecake Factory. Not surprising. That hits the sort of upper end of that, chain market pricing. And they declined as they reported fourth quarter net income of $28.8 million, or 60 cents a share. They were expected, or they came in last year at 83 cents a share. So, getting hit for not doing as well. They also said that they definitely have less consumer foot traffic, and they are seeing, they adjusted down for next year also. So that has them getting hit pretty hard here. Also, did want to mention Hertz also getting hit here after Carvana's news. They're down about 4.34% here this morning also. And I did mention all on the other side of the good DoorDash news, Grab down about 1.1%, their competition here. Other names I've been watching so far are sectors, like we said, the energy sector, one to keep an eye on today. Occidental, we already mentioned. Chevron is another one to keep an eye on here today. They are currently up about 1.5%. And again, most of the gas and oil companies seeing a pretty good day as oil premium is rising. We're seeing some selective consumer internet names that are moving well today, like we said, DoorDash, eBay, and Etsy's. Laggards so far, Staples and Retail Consumer Barometer. Walmart just had their earnings come in. I do want to grab that for us here, the numbers. They are down, or at least were down on their earnings release here. Right now, about flat now. So down about 1.73% yesterday, and down a little bit. They posted strong holiday growth, but their earnings outcast for this upcoming quarter and year are under a little bit of pressure. They expect net sales to increase by 3.5 to 4.5%. They fell short of what Wall Street was expecting there. Their CFO, John David Ramey, said that speedy deliveries from stores are helping Walmart attract more shoppers, particularly those with higher incomes. So they are hitting that higher end of the K economy. They did pick up a lot of growth within their e-commerce is what I was looking for there. That was very strong for them. That was an area that they have been somewhat of a laggard here. It rose 27% compared with a year ago, fueled by store fulfilled pickup and delivery of online orders, along with the retailer's third-party marketplace. That marked the company's 15th straight quarter of double-digit digital gains. Try to say that 3 times fast there. So I thought that was pretty big. And for the company's U.S. business, the e-commerce now accounts for almost a quarter of their sales, 23%, a record high for Walmart. The digital growth in the quarter included approximately a 50% gain in in-store fulfilled deliveries and roughly a 41% increase in sales from Walmart Connect, its advertising business. So while they're gaining ground, though, it's not always evenly distributed across income groups. Again, the CFO said that the company does see some pressure on the lowest income cohort. He said Walmart has tracked year-over-year spending trends by income group. Like in the prior quarter, he said it saw that spending amongst the highest earners compared to the lower income groups had gapped out even further. So definitely not something we want to see there. We don't need that K-shaped economy to go even further. But that's it. This is the first quarterly report under the new CEO, John Furner. So he's, so far so good. They largely expect him to focus on the same priorities his predecessor did, which again is online business, attracting more customers across those higher income areas and ramping up the higher margin business like its third-party marketplace and advertising. So again, nice little move. Earlier they got above, and at current price still look like they're just above $1 trillion company here. So nice move in general by Walmart over the last several weeks. Pulled back over the last 2 days, but still holding up well at this 126.57 area here. We'll see if, people rotate into it today. Another name that's down going into earnings, Rigetti comes into earnings next week. They're down about 1.79%. We do see some of those quantum names getting hit a little bit today. Also, Zscaler's down here this morning. The other one that I haven't seen any reason why in general, but a lot of the management companies, Apollo Global, down about 2% here today. I also saw Blackstone down about 2.85%. So some of the money, the biggest money managers out there getting hit a little bit today. American Airlines also down about 1.13% here today. So they're down a little bit also. We do see Western Digital and, again, some of the computer names catching some wind today. Western Digital up about 1.2%. Dell up 1.64% in that sector. So that's good to see a few of those. Tempest AI is also having a pretty strong day, up about 5.88%. Another strong one here this morning is the IT company NICE. They're up about 8.45%. They did have earnings this morning. I haven't seen any news on it yet, but looking at it, it looks like they beat both on top line revenue and on their EPS. So good to see that. Some of the mining names are jumping back a little bit today as gold and silver are picking up a little bit of momentum. So we do see some names like HYMC moving to the upside here, up about 3.22%. We are about a half an hour from the open. Advanced decline, right now, not so strong. It isn't a huge downside on it. It's down about 350. Tick is slightly negative here this morning. We do see, again, the VIX moving to the upside, up about 4% overnight here. That's putting a little bit of pressure. And again, we see the Qs down about 42 basis points, the S&P down 34 basis points, and the Dow Jones down about 33 basis points here, about a half hour before open. Markets seem to be a little bit risk off. Again, rates were ticking up slightly. We'll keep an eye. Is that still the case after those economic data? Yeah, still ticking up a little bit. So the 10-year back above 4.1 this morning. 30-year also up a little bit here, up about 40 basis points. We do see King Dollar still moving to the upside, almost at the 98 level, trying to break through its 50-day simple moving average. So the market is not giving us a clear direction so far. It looks like we're going to need to see earnings reports come in, and hopefully some of the rhetoric out of the Middle East start to move in the right direction, because I know BigBeat was concerned about that late yesterday afternoon. He'll be coming in here in a second, and we'll find out what he has to say. I actually see that Steve is ready to go here, so let's play his intro and get the big man into the room.
When markets move, Stephen E. Orr takes the chair. From the White House to Wall Street, he's spent decades at the intersection of policy, markets, and real capital. And he's seen firsthand how institutions use data behind closed doors. Now, as founder of Quasar Markets, his mission is to pull those signals into the open so everyone can see what really moves the markets. This is Stephen E. Orr, BigBeat on Wall Street. Let's filter the future live.
Good morning, BigBeat. How are you doing, my friend? What's going on today?
I'm good, Howard. I just listened to you before I came on here. You're absolutely right. I am concerned about Iran. We've never had this kind of buildup in the Middle East unless we went to war. And, you know, it's interesting. I just made a post 2 seconds ago that if you have $735 US, you're now a billionaire in Iran, right? That the rial has crashed. And that is a clear sign of what's happening in, good morning, Zora, a clear sign of that we are going to war. So, yeah, be prepared for that. Now, that being said, the markets aren't always concerned about war in general, but they're worried about not having clarity. They don't really they need to understand why we're going to do this, what we're doing, and is it going to affect us here? And I think, I don't know if you mentioned this morning, but Amazon is now the largest company in the world. It just surpassed Walmart as of this morning, right? And that tells me everything. That people, you know, we talked about this on this show, and it's still my biggest position is Amazon, because Walmart doesn't do some things that Amazon does, AWS, things like that, right? Are people still buying? Yes. Is AI still an issue? Yes. Are Walmart part of that deal? Nope. Are they selling products and things? Yes. But for me, it's about a bigger picture, about having everything, and you're seeing that. And so when I look at this war, because it's gonna be a massive. It's not gonna be 1 day or 2 days. It's not gonna be like a 7-day thing. It's gonna be a while. Because Iran is unlike a lot of countries. They have war products. They've got military buildup. They've got ships. They've got drones. They've got all those things. But when you look at Fifth Fleet diplomacy, the Fifth Fleet's right there in the Middle East. It's off the coast of Iran, and that's a concern to me. So let's see some clarity, and then I'll be able to get a little more. Let's just say some talk around it so that I understand. Right now, I don't really understand exactly the full-blown understanding here. Yes, I understand there's a regime change. I understand death to America. But we're hearing in the streets in Tehran that there's death to Khomeini. So there is a regime change on the way. Khomeini's in trouble. But if you look at two things right now, well, the first thing I was going to say was Cubans, the Cuban team, let's say it's Canal's team, is in Moscow. So there could be a situation here where Russia could rise up and say, okay, you know what? I'm going to back Iran, the BRICS, right? So will Cuba join the BRICS? That's an issue, right? So all of a sudden, that's no longer just Brazil, Russia, India, China. It's now on our doorstep. So I think this is a bigger picture thing than just, we have 2, 3, possibly a third tank off the coast now of Iran in the Strait of Hormuz. So this is not some small little thing to worry about. It's not something big to worry about yet, but we don't have clarity around it. And I need clarity to understand that. But that's not stopping me from investing.
Right. Absolutely. Might change what you choose to invest in, right? And the sectors that you look at for sure. You know, defense obviously always takes off in times of war. So looking at those names would be a good idea. Energy, like we've talked about. Steve, do we break above 70 here on oil? You know, you are the oil man.
You saw a drop from the 66.60 if you're looking at WTI West Texas Intermediate. It fell I think this morning here somewhere around 64 something. 60. We look at it. If I pull up a 5-minute chart, I only pull up a 1-hour chart on oil here. For myself, if I saw that yesterday it was a 63.50 and now we're at 66.30, so a $2 run up doesn't tell me that. War should be around $75 to $100 a barrel.
Yeah, that's what I was wondering.
Go ahead.
What I was going to say, because as you know, through our back channels yesterday, someone that was part of the former White House under this president sort of told us what his feelings were on things. 50 planes isn't war more so than an attack, you know, maybe like last time.
Yeah.
You know, strategic. Yesterday, they had over 50 planes flying around the Middle East, as we know. You know, those are the things you do to sort of probe and see how do they react to where, you know, you move your planes over here. What did they do? I moved my planes over here. What did they do?
Political, Howard. Let's just talk about the last time that we attacked Iran. Obama was Stuxnet, right? We hit them really hard, knocked all of their equipment out, electronics out, and we put it back in place for them. So,
Yeah.
you know, but we're seeing fires all over Tehran in military installations. Something's happening over there, right? This is not some. And in a weapons depot now was hit. It's not a gas leak, right? Yeah.
Steve, from there, I got to bring up Fed minutes yesterday because now we have two-way threat. Rates could go up.
This is the most complex Fed I've ever seen. It's getting worse instead of better. I don't, you know, look, it's getting political, and to me that's a big issue. So no, right now, Howard, I don't understand this Fed. I mentioned this yesterday with Steve Flanagan that I got a questionnaire from the Atlanta Fed. Most people here know that I'm a member there, and I wanted clarity. I want to know what they ask. If a new Fed member were to come, what would you look for that person to be? Well, okay, I understand that it's a community issue, right? Because there are community banks, they are in that area, but I need to understand what the person's thinking, and stop being academic. I think Steve's right. They've got to have some institutional knowledge here, and the new Fed, whoever that person, that governor ends up being, needs to understand the situation in the world a little bit and have better data and not this academic feeling of like, okay, because the markets are moving faster than a book is going to be written and produced for you to read. Okay, so I don't understand that, and that's the only thing I said. You got to have better data, and I'm willing to give them a copy of Equates Markets. But
well, you know, when you said that better data, you know, you trust the today's data that came out. I'm going to put you on the spot because I'm going to tell you right now, I don't. I mean.
Yeah, I think you're right. I don't trust it. I mean, I don't know. Let's put it that way. I want to say
historically low level.
But I mean, I've loved data since the day I was born. I just love the knowledge of data. I ingest it, right? And I ingest it in a way that makes sense in my head. It doesn't always make sense in everybody. So I had to build a platform so everybody can understand it. I don't understand this data. I don't understand getting it, right? I have sat down many, many times in DC with BLS, Bureau of Labor Statistics, for those of you who don't know, BLS, under DAL, Department of Labor, sorry. The DC side is coming out. They cannot, as they always say to me, they can't fake numbers, right? Listen, every number in the world can be manipulated. It can't be faked, right? You're either lying about the numbers or you're not putting the numbers in right. So that's lying, or you're missing something. So things like snowstorms or things that can affect a blip, right? And there could be, because there could be a blip due to massive weather did happen in the wintertime. We know that. But these numbers, I am completely confused by these numbers. I don't understand the numbers, and I'm trying to understand them. And when I don't understand something like this, it's usually something's wrong. And so this is what's happening here. I think there's something wrong here in these numbers, but I don't know where it's at. I don't know if I don't think anybody's manipulating it to a way that it's political, making it political. If that's the case, people need to get fired. I mean, like ASAP, because the whole world revolves around those numbers, and you are there for one reason, for the numbers. If you're not doing your job, kaboom, you got to get out. Right? I mean, but people make mistakes. That's why I'm saying data needs to be done by machines that don't care about your politics, that don't care about your religion, don't care about how your day went that day, how you need to be manipulated by the politics. I don't care about any of that. I want to see real hard data so that I can make better decisions. You can't make, the world's falling apart. Let's make better decisions, make a better world. So, no, I think you're right, Howard. No, I don't trust these numbers, but I need to understand them better, though. Lockheed Martin.
Absolutely. Steve, another thing, I wanted to ask you here was, you've been doing a lot of rotation around the globe. I was looking at an article that was still pointing out that even with the Nikkei hitting their record highs, the stocks hitting record highs, if you look at their multiples of their, versions of Mag 7's top stocks versus ours, it's not even close. We're still at 23, 24. They're down in 10s, 11s, 12s. Does that mean there's still room to run for some of those companies?
Always. Yeah. Yeah. And all that Mag 7 rotation, that's nonsense. They run as Warren Buffett says, I don't invest in companies that don't make money. And the bottom line is you got to make money in order to be invested. And these companies don't make money. They make a hand over fist, right? IBM being down $4 today, that's just silly, right? I can't wait to buy IBM down on this dip. This is stupid, right? I mean, you can already see it now. People are starting to buy it now, and I think I'm gonna do it here the pre-market actually. I talked about Oracle getting beaten up. I expected Oracle to get beat up because they weren't matching their numbers, they weren't matching what they're doing. But now Oracle's up 2% over the last couple of days, and now I'm gonna buy some more today, right? This nonsense is happening again, and I don't like nonsense. I don't like when common sense is out the door. And I'm going to tell you right now, I don't think it's people that are actually making the decisions. I think it's overwrought algos that are causing these issues. This zero DTEs. I mean, I'm seeing people going, wow, like how is this market happening? How is this volatility so high? Well, it's because the machines are in charge, and they don't care about your politics, religion, or your feelings for the day. If you're sick or if you're out today, they don't care. The machine's just running what the machine's doing, right? And the machines have been wrong. Algos are not making money. I've seen so many posts on Twitter going, "Oh, pick my algo because my algo made 500,000% this month." Yeah, BS. It did not. Show me the numbers. You never see them show numbers, right? So. And if your algo is so good, why are you trying to sell your algo? Right? If your algo is so good, you don't need to sell your algo. So that's what I'm saying to people. Like look, just be smart about this. Have common sense. Invest, as Steve Flanagan said. Yes, invest in what you know. Understand that. And so I think it's what I'm like. Look, I asked Mike Stewards and I asked Bubba on Tuesday. It was Tuesday. Lower or higher come June, July. They both said lower. That the S&P 500 will be lower come that time. Well, all right. Why? And they both said the same thing to me, right? That the question mark around that time was that people are nervous, they're scared. There's this, concern, and then they have every right to be, because the world's not good, folks. Okay, I want them to understand this. The world is not good. Okay, there are some problems, and they're ignoring it. But let's talk about, if you want to talk politics, let's talk about UK politics. Here's one thing that really happened that I think is really good, Howard. Andrew McDonald got arrested.
It's funny. I was going to give you a choice. You did it for me. I was going to say we have time for probably one more subject here. I was going to give you two different ones to choose from, but you took it into it. Yeah, I mean, is this? And I wonder, is this, because I mentioned, I don't know if you were listening earlier, Apollo's down today, Blackstone's down today. I couldn't find really any news directly to them outside of sort of blowback from the Epstein files. Nobody that has hit all of these big wheelers.
My mom and dad even asked, should we be investing in REITs? Nope. because nobody's going back to work in the office. They don't like it. They don't want to be there. I don't blame them. I mean, look, I have been working from home for as long as I can freaking remember. I can't even, I mean, like, I love working from home. No, but not because I could, you know what? I actually work more when I'm at home than I did in the office. I don't have this work, you know, water cooler talk and out of backlog. I get a lot of work done. As you know, I'm surrounded by computers, but I also get the chance to go do my laundry and things that, you know, that you have to take off for to get things done, and you waste your weekends. People don't want that. People want longer weekends, harder working, and they'll do it from home. They'll get it done. Now, that's not for everybody. I understand that. But that's why REITs aren't working. And if you look at companies like Jones Lang LaSalle and CBRE, they're really hurting. All right. And you can always tell because as you all know, Michael Litt, and he's in surgery today. So heart jobs on him as back. But the when he'll always tell you the key to this. This is the guy from the Big Short, right? He'll tell you this. So if you want to know how a real estate investment trust is doing, or you want to understand how a building is doing, look at the key cards. All right. How many key cards are being issued to new employees? And they're not, right? And that's Castle Systems out of DC. And by the way, I love Castle Systems. I know the
we love Chuck.
Yeah, he's a good guy. He loves tennis, by the way. And I used to live right next to where the tennis court was down there in Southwest DC. But that's how you know, right? And so these little things that we tried to show from the institutional side to the retail side is the little things that can give you a leg up, right, in investing. We know before that things happen. And we don't do it because some algo told me this. It's because we see things and we believe in common sense. So when I see those things, Howard, are people worried about the war? Yes. Are they worried about real estate? Yes. And here's another thing. Mortgage rates have come down. For you, when we come down, sorry, no offense, not good enough.
Jinx me. Do not jinx me.
Not good enough, but they're coming down. And so when they come down like that, because the mortgage apps are not being filled. Refis are not happening. They should be happening in huge numbers. They're not, because people are scared about getting a new home in this kind of time.
And
labor costs are
putting more credit on, changing their credit. Everybody's scared to do anything right now. I think, like you said, especially on that bottom end of the K, they can't. So that does it there. Steve, I'm about to head out here. What are you seeing? Do you think it's sector rotation today, or is it a red day across most of the sectors?
Well, as we noticed yesterday, and I was very concerned about it yesterday. If you look at Oracle chart, you can see what's happening. I mean, the morning is one, it's up and down so fast. It's literally algos. People keep asking me, how do you know it's algos? Look at the chart. The chart's telling you that it's algos, right? There's no volume and the thing is moving up and down so fast, right? In the pre-market. Why? Because the machines are in charge, right? It's not options. Zero DTEs. And I know. What's that?
They don't start till 9:30. Zero DTEs, so they're not pre-market.
That's right. So when people say, "Oh, well, maybe it's just these," no, it's really not. And I'm going to tell you, and all my friends at CBOM, I love them, but zero DTEs are going to take a major hit in the next year or two, especially with prediction markets coming in. And prediction markets won't be around in 5 years, folks. Listen to me. Right?
I don't know if you saw it, but our friends over at the CME just announced today 24/7 crypto futures, perps, and options.
I mean, it's the world. Look, I believe in 24/7. I think the world should be 24/7. I believe we should sleep, but as long as you have your protection on. Here's what happens in the markets. When you put your protection on, say like you put your limit orders in and they don't hit for the morning and you don't get lifted, right? That's a problem, right? Because the market could just go against you in the mornings and they know that. So 24/7 is not a bad thing. It's actually a good thing. Now, the question around it is whether or not that there's enough liquidity. And liquidity is a big, big question mark. But as the world becomes smaller and smaller and smaller, and we see that we need to see more of the investors around the world investing in us. And we're not. We're seeing the opposite. We're seeing people pull money. China's pulling money out of us. Japan's pulling money out of us. Foreign countries are pulling money out of us. So this is a big convergence that we need to make sure that we're prepared for. So
Yeah. Well, on that note, Steve, I'm going to take off here. You have a great trading day. Quasar, keep your head on a swivel today. It's going to be an interesting one.
Yeah, I agree with that. Yeah. All right, folks, I'm going to turn on my charts. I know y'all want to see the charts, and I will get the up and running here. And here we go. I'm going to pull up the QQQ already. There we go. And we're already seeing a little bit of dips now. Yeah, jobless claims now dropping the most in 2 months. I just don't believe that. But and I don't think the market believes it either. So, but we are here. And this is what we got to play with. And this is a daily chart of the Qs. Now you can see where the Qs have made that turn. As you know, I'm going to pull that rounding effect up for everybody so you can see it. That's what I mean. Badoomp and badoomp and badoomp, badoomp. By the way, badoomp is, by the way, that is a technical term by traders. Badoomp. There you go. There we go. And there he is. O's coming in. You got a big meeting today. But look at you. Oh, you're all dressed up today, man. Look at that.
Yeah, I know. I'm sorry I was a little late. I had traffic. It's just, it's foggy over here. You can't really see that much. So it took a little longer, but I apologize. But I'm here.
No, you're good. So what are you thinking about this Qs now? You think, look, we've had so much going on with all these question marks around Iran right now. Are you concerned about what's going on here?
You know what? I thought about it a little bit more, and I was actually listening live when you guys were talking earlier, and it gave me a little bit more insight in the aspect of there's a lot of uncertainty going on around the world right now, especially over there with Iran. And the real question is, can they pull off that regime change? Because that's what they're trying. There's riots and protests going on in the streets. Yeah. But it's how are they going to respond? How's the government going to respond? Are they going to send tanks out, or are they going to just say, okay, we're going to peacefully go away? That's something we have to wait and see. And then we also have to see the response from, I would say, the United States and, Israel. That's also there. That's also their big adversary. So last time, you mentioned how we had that attack on them, but they also had to save face and say, you know what, hey, move your troops away from, I think it was in Qatar, from that military base. And then they threw rockets, but nobody was there. So they still have, they're trying to find a place where they could save face, but we'll see how that goes. I mean, you hearing anybody from Washington say anything about that?
Yeah, my Rolodex is picked up, right? I mean, the chatter. For those of you who don't know, I do get all those fun chatter behind the scenes of what's going on, and no, there's no cabal and there's no world, tinfoil hats going on in DC. There's no swamp, folks. Sorry, but there is, the powers that be, and yeah, look at that. Oh, all dressed up. Look at that. Like Zora's liking that. I love it. And before I get into that, here is a professional. He's owns his own insurance company. So folks understand
agency.
Agency should say. Okay,
yeah.
Sorry, agency.
It's not.
Yeah, but you have very big insight, because for those of you who don't know, O has been around for a long time. He and I started Benzinga Live. So for those of you, if you watch Benzinga Live, and I love Benzinga Live, and the guys that are there now are the ones that we brought in, right? And trained, is that now when you look at these markets now, they've changed over the last 15 years as we've done this for a long time. 24/7 markets. Do you think there's going to be enough liquidity in the markets? I mean, you're that age that you're trading all this time. I mean, are you seeing that?
Right now it's kind of low, but overall, like, are you referring in the last couple of years, or are you referring just like right now in the last couple months?
No, in the last few years, of course, yeah.
In the last few years, I would say I've seen a lot more liquidity personally.
Yeah.
And it depends on like the different types of sectors. I've seen a lot of shift, because when somebody's buying, somebody else is selling. So there's a lot of moving, and there's a lot going towards technology, especially towards AI. We talked about this the other day, and some people are saying it might be a bubble, but that's just we would have to see, because there's so much that goes into it. There's a lot of money coming in. There's a lot of tech, and there is a use for AI. like you were mentioning earlier, because like I said, I was listening in, the part about everybody has a, you know, a chat bot that they're trying to use to trade and all that, and it's like, hey, come to me, I have the best one. Why are you trying, like you said, why are you trying to, you know, sell it if it's so good? Keep it for yourself.
Right.
Right.
Yeah, and I hear
Like,
that all the time, just how great that their chatbots are. And I'm like, dude, I wouldn't touch your chatbot if you gave it to me, right? Yeah, I don't. I look
that,
at these chatbots and I'm just like, why? Well, why? What are you trying to accomplish here? You're gonna get your behind whooped, right?
well, it's, they make the money from selling the chat bot,
Of course they do,
not
yeah. Right.
from doing the trades. And then they're able to say, well, look, I got money. You know, I got this and this, and that's not where it came from though. And that's for a little bit of prehistory of me, so the listeners can understand. Originally, before I joined Benzinga, I had a company called PennyStocks.news.
We did.
And what happened there was, it was similar to Benzinga, but it was focused on the penny stocks world instead of, you know, NASDAQ, NYC, all that. So there was a lot of, especially back then, pump and dumps, which were, I was, I witnessed it firsthand, and I didn't want to participate in that. And that was one of the main reasons I got out, is because it doesn't last. And nowadays, you know, it used to be where if you wanted to get these crazy returns, you know, you would have to invest in penny stocks because they're so volatile. Now, big companies are able to make 100% moves within a year. Prime example would be like Tesla, Nvidia. All these in the last couple of years have moved. They skyrocketed. You don't need to invest in a penny stock anymore to see those kind of returns. So there is a lot of more volatility and liquidity because there's a lot more going into those rather than focusing on like the penny stocks if you're looking to get those high returns. But I mean, does that make it safer? Or does that make sure that, you know, there might be a drawback and it might be a big one? That's to be seen. What do you think about that? Do you think there might be a decent sized drawback coming here?
I just don't know. I mean,
I hear you.
look at the markets in general, and I say this all the time, markets in general, because sometimes people just look at their own markets as, oh, I only trade futures, I only trade options. That's just nonsense, right? You need to understand every part of the market so that you can understand the other part. When people say, well, I only trade oil, well, oil is in literally everything. I only trade Amazon stock. Well, people trade Amazon stock. I only trade oil. Well, oil is in literally everything. I only trade Amazon stock. Oh, I'm getting back to you. I only trade oil. Well, oil is in literally everything. I only trade. Sorry about that, folks. O's got the thing going on. I'll unmute it now.
Hold on. The host.
So, but when I'm looking at the markets, you need to really kind of understand every part of it, right? And too many people, especially in the retail sector, they only do penny stocks, so they're only doing 0 DTEs, or they're only doing certain things. And when they do that, yeah, they have a problem. So, yeah, no, I don't think so. Oh, I think I'm gonna turn it back over to the charts here. I'm gonna add to the stage here. There we go, and here we go. Yeah, I got you. Yeah, okay, no problem. All right, let's get to it. Q's now 605.79 here. I'm gonna pull up Amazon. As you know, I am buying more Amazon down here. I like this move here in the morning. There we go. 1 minute. And we've got roughly about 3 minutes now to the open here. So, okay, welcome back. Oh, you can hear now again.
Yep.
Good.
Sorry.
It's okay. And we are about 2.5 minutes here now to the open. What do you think? And what's your first thoughts here on the markets? Up or down?
Well, I'm going to say a little bit down, but similar to a few days ago, not that much volume to justify it. So it could bounce back, but I mean, it's kind of, it's just a little bit low. It's not. Really...
Kashkari now says the Fed is cautious about using AI internally with strong guardrails against giving access to confidential data. We just talked about that. But you know what? Look, let's be honest here. At least the Fed is now talking about it, right? And that's important, right? That they need to understand that their data and the way that they look at the markets are behind. Right? I mean, you would think that they would want to have the greatest and best data in front of them.
I have one question though to that. Who? It's one thing to get the data that way, but who programs it to?
Well, obviously, it's the government, right? I mean, it's the government
Right.
data, right? So if they're not just going to Wikipedia and pulling their Fed data from them, then okay, and I agree with that. That's what I've always said. AI should be attached to the actual databases, which we patented them. And
Right.
I look at that and I go, why are you? What are you talking about, right? Your data is guardrails against giving access to confidential data. Well, it shouldn't.
I mean,
it should be to everybody. Why should the Fed have data that we don't have? That's wrong.
Right.
And I think that's wrong. And I think that Kashkari now says crypto is utterly useless. We don't care what he says. I
don't know about that, but
he's also saying that the Fed is close on mandates and rates are pretty close to neutral. He's lying. I'm gonna say it right now because they all said 2% is neutral, so we're not at neutral. So that's either you're lying or you're stupid, and either one of them you shouldn't be a member of the governor. Then I'm sorry that one got me right there. That he just said that both mandates and rates are pretty close to neutral.
well, like you said, it's also getting political. When you want to.
That's right. It's getting political.
You want to keep a seat, you gotta say some stuff that you
I
might
don't
not
think
agree with. But that's how it is.
Much longer. I don't think he doesn't. I don't think there's a camera he doesn't like, to be honest with you. Like, he can't wait to be on TV. And I like him as a person, but as a governor, I think he just, like me, talks too much probably. But let's get to it. Charts right now. Here we go. Here we go. Markets now open on the first run here. Quick slip down to the down, but we all know the last few days that the first move has always been the most raw move. There we go. There goes the moves. So let's see. Yeah, Amazon pushing up now here too as well. I don't see much either way. The other side of this is going up. Oracle pushing up a little bit. Amazon pushing up. Amazon now being the largest company now that Walmart failed on their sales. There we go. 204.51. I think Amazon could go positive here. There it is, and we're very close to going positive here on Amazon.
Yeah, we were talking about it, and it's Amazon is one of those companies that I think the biggest thing is like with Oracle is they're getting that data, and they're getting that consumer feed, and that's what I think the real future is. They're able to collect that, and they give you things like you know what you're gonna get before you see it. You see it on the app, you're like, oh, I was just thinking about this, but let me get it. It's they're gonna be here, and you know what you were talking about earlier, and I want to get your opinion on this. I want to go back a little one subject about don't invest in companies that don't make a profit. Well, I mean, Amazon is a little outlier to that because originally they weren't making profit, but here they are.
Yeah.
So
but I want to talk about investment, right? You have to have a thesis, and in Amazon's case, he always knew what he wanted to do. He always knew what he was going to build, and that was different for him, right? And when Jay Leno asked him on the Tonight Show, hey, you're losing $100 million a month. What's $100 million? That's not even a minute to him now, right? And he didn't care because he had his thought. When I say invest in companies that make money, I'm talking about companies that, if you're grandma and grandpa and you're putting money away for long term and you need to have this money and this is the money that you're investing, that's right. But not every dollar should be just investing to make more money. It should also be investing in companies. That's exactly why the stock market was built in the first place. I know we've gotten away from that. Now it's like a more, and I hate to say it's gambling mentality, but that's where we are. And I don't like that. I'm here because let me tell you something. The stock market is the greatest wealth generator in history. It has been that way. It's the way I live, right? And so I like that. But okay, here we go. 204.53. Can we break that? There we go. 204.70 here now on Amazon. Has been pushing here the top here. I'm really liking this move here on Amazon.
Yeah, me too. Let me see here. Yeah, it's pushing up a little bit more. I mean, if it could break that, then it could just make a little pop. And
yeah, because now Amazon, And I think here's one of the cool things about Amazon now, that the biggest company, you're going to see a lot of major companies now investing in Amazon that have to move over to like the S&P or ETFs that now have to buy Amazon because now they're the biggest company. So I also see that movement over the next few weeks too as well. But I do like that. Oracle now, I'm getting hit a little bit on IBM here, taking a little bit of a pump on IBM, but there we go. Come on, let's break that high. 204.85 now is the high of the day. So let's see if we can get back above that. Yeah, I'm liking this though. And look, it's not that big of a negative day. It's pretty much a quiet day considering that war's on the doorstep and everything else. I mean, I'm not too concerned about this. Advanced decline down 3,000, so that does bother me just a wee bit here. But yeah. Look at that, 204.69, 74. Can we break the highs? I think we will. Go right on up. There we go. High of the day, folks, 204.96. Keep going like that, and I'm happy. 204.97 now. Yeah, and I own a lot more Amazon today, too. So, yeah.
Just a disclosure, huh?
Oh, I have to, obviously, right? Yeah. Oracle now up a whole buck now here now. Liking that. Let's see if we make another run at this on Amazon. I think you're going to probably see it go positive on the day once again here. 205 was the high of the day. Let's see if we make another run at this. Tick now down 168, so it's fairly flat. And advanced decline minus 29.48. So positive day here could coming up pretty quickly. Let's see if we can push to the upside here a little bit. 204.60. And minus 266. So could be a little bit of selling here as the little profit taking here in the morning as they start to settle a little bit. Yeah, but I'm not too concerned about it. Tick down minus 310 now. The best decline now down 3,126. So a little bit of negativity coming back, sneaking back into the markets here a little bit.
Right.
Yeah. Any stocks you like right now?
I'm looking at Walmart a little bit. And
there we go. Good old Wally World. Probably getting smacked a little. Oh, it's up to.
Yeah. It made a little rebound here. I mean, that's it's got decent volume too. I mean, it's not, you know,
I'm not liking that too much.
Let's see here.
All right, I'm going to pick up some IBM here on this dip here down 2.33%. I think that's absolutely silly. IBM is the back end, baby, of the markets. So, okay. Amazon now taking a little bit of a spanking, but I like that.
What do you think of Bitcoin? It's down again, and it's.
Look, I get it. There's people out there selling. I understand the miners are scared. They got to make money. They're scared. There's this algorithmic trading, but I buy dips. I don't understand. You know, it tells me all the time, that when things are a sale at Walmart and Amazon is when I buy. Right. And when things are high, I don't want to buy that product anymore. Why is the market? And talk to me about it from your age group. Why is the market the place when things are on sale that people get scared?
Because it's a form of leverage, because my generation doesn't really have that much, and then when you have that little bit invested and it just you see it go down, you freak out and you're like, oh my God. But that's the part where you need to have a discipline when you're trading, because that's what's going to make you successful or not, that discipline. You know, I had those mistakes myself too. I'm guilty of it, you know, where, you know, I would buy something, I would chase to get in because I see it taking off, and then I would end up in the bottom. And it really took me a little while to figure out, like, okay, you know what? I'll just ride the wave. I'll have to wait for it to make that bounce back, because I am younger and I do have a time horizon to be able to see that come back.
Yeah.
So I that mentality change has
What
made me
did you
say,
do to change that mentality in your head?
well, I mean, I sat down and I asked myself, if I sell it right now, it's a guarantee loss.
Right.
But I believed in this originally when I got in, so why not keep it until it comes back? It's harder. I mean, it sounds simple, but it's harder to get that in your head and actually follow through on it. But
Amazon's slipping here a little bit more.
Yeah. And you know what? That's the other part about, people in the, like, from the 30s to like 40s, where they're in their careers, they're getting those promotions, they're starting to, have a 401k here or there, and they're starting to like build towards their retirement and their wealth. It's they're not they're in their prime of their career, but they're not, with the cost of everything going up, with the cost of all the stuff that's going on right now. They're asking themselves, how much can I put to the side, and how much to invest, and how much do I have to make sure I have on hand to make sure I can pay my bills. So it's getting a little tight.
What do you
It's
say
not.
to those the new numbers for credit cards came out, and said that credit card debt for amongst your age group was very high. It's the highest in history, or since COVID, I should say. And the next time before that was 2008 so are they using credit cards to pay their bills?
100%. I
Wow.
was guilty of that too, and then just recently I was able to pay it off. But it's like I said, it's a mentality. When you're able to, back in the day, my dad and a lot of the, older people, like my mentor who is in his 80s, they always have cash.
Right.
And parting away with that cash, it has a different psychological feel. When you just tap a card on a thing and you just hear a beep, you're like, that didn't cost, like, in your head, you're like, it didn't cost me nothing, but I got this, instant gratification of getting the item you just got.
Kind of like at the casino with chips, right? You kind of forget like how much things are worth, right?
Right. And then next thing you know, you're like, whoa, I'm in debt paying 18-25%. And you're like, okay, well, it's kind of hard to get in, because all you're doing at that point is paying debt. And unless you're in a financial position where you could just pay it off right away, I would not recommend that.
Yeah.
It was
for those of you out there, I did buy more IBM here on this dip. I do like this IBM dip that came through, now down $5 here. I bought some more on this dip. Probably getting back to the 259 handle here, 256, 260. I'm sorry, so 260. I think we push right back up. Let me pull up a 1 hour chart here. This is what I'm thinking. These sellings here. There's a lot of buyers down in here, and I like that too as well. There was a nice move on IBM over the last few days, and I took advantage of that. Yeah. We'll take a moment here to talk about tomorrow. And be part of that too a little bit. We're going to go all day long, folks. We have some very big names tomorrow we're going to literally start in the morning at 9 a.m. and we're going to go all the way to 5 o'clock. No stopping. All kinds of cool people that people that are big names on Wall Street will be coming in to talk to us all day long. We will not stop the show. I will be all day to talk about the markets, and I'm excited about tomorrow, to be honest with you. I'll probably put a suit on tomorrow. Yeah, looking forward to that. And some very big names. I won't give it away. You got to tune in tomorrow, and I'm loving all the numbers that are coming back into the show. I apologize. Twitter's been a mess over there, so we'll hopefully get that fixed for them. Yeah, here we go. IBM now pushing back up again. We'll add it back to the stage here. But I like this move here on IBM. If you had a chance to pick some up down there, I like this move. Yeah, there you go. Yeah, you can see where the buyers and the sellers are holding, and then they held down there. So I do like this move here. Very nice move.
Right. Look at Southern too, SO.
Yeah,
Southern
Company.
What do you think about what's going on in that sector?
Well, I mean, obviously for me, utilities are a big play. Let's pull up a weekly chart on Southern companies, and I'll show you what I do like about utilities right now. Look, if you look at inflation really happened in electricity, and the margins got cut a little bit. But now the electricity is coming down, and they're not going to stop giving. They're not going to give you the rebate, right? So
Right.
margins are looking pretty good for Southern Company. You can also look at Duke, Duke Energy, same thing, right? Duke. If you look at a monthly chart on Duke, look at that, having fun.
Wow.
ED, which is Con Ed, same situation. All the utilities are making money now, and you talk about it from the perspective of when they were losing money during COVID, right? And there you go. There's your COVID time. They were getting blasted, but these are companies that pay nice dividends. Understandable. There's supporting a 3.05% dividend there, so I do like that. Hey, look on this. Look at this. Amazon. I look at the 1 minute chart here. Pull it back up. Yeah, see that pop there? I had a feeling that was the case. That rounding down there. They were testing that bottom. They found it, and I knew where that bottom was. There was the buyers and the sellers. You can see the charts. Yeah, I like that too. Oracle now up $1.83 now in Oracle there. Yeah, I'm liking this a lot here. Yeah, nice push here. If IBM can get back up there too as well, I think. Yeah, look at that move on IBM. That big old blue. I told you, if that rounding, you saw the bottoms down there. You see the numbers. I mean, my charts are pretty dead on. If you want, I'm always happy to show my charts and where they are. And you can see what I'm following. They're all there. You can take pictures and videos. It doesn't bother me. Knowing what I'm looking at. Doesn't mean just because they're in here, folks, does not mean I'm actually investing in them. It means they're on my radar to look at. Okay, so just understand that. But look at Oracle now at $2 here. I said that over the last few days that Oracle was very beaten up, and I do like this Oracle move. I will say that for me, Oracle has made a really nice profit center for me. And I do like that.
Well, yeah, I mean, let's see.
Look at that.
Yeah.
Look at that. Nice move. That's a nice move on Oracle. Yeah. IBM now only down $4 here. So yeah, there's that. If you look at the 1 hour chart, they just tested. Understandable. Look, see the news came out and see what happened to selling. That's algos, folks. That's the algos getting it wrong. Again, that's what we talk about all morning long. The algos have not been on target here. Now, I know that there's U.S. trade deficit for goods hit a record $1.2 trillion last year. That news just came out, and we already know this news. Algos are trading off of news, and they're getting it wrong. And that's why I'm saying be careful about that out there.
Well, listen, now that I'm thinking more about it, I'm like, okay, well, maybe if that should be a mindset of like, until they get it right, just anticipate of if we can see how the news are, but we can anticipate, okay, maybe what if the algorithms are going to be getting it wrong? Maybe that could be a play in itself.
Look at that. Look at that selling there on Oracle there. You know, it just this is not people getting involved, right? This is definitely machines. You can see, look at that big volume right there coming in. That's just nuts, right? And that's what I'm saying. This is a 1 minute chart, right? So I do like this move here. I buy it up again. You know, like that's what I'm not telling you we don't talk about what to buy or sell here. We just don't do that, right?
Right.
But Amazon 203.70 here. Look at that. I mean, we could go positive here on Amazon after this morning's move. Remember, what about Blue Owl this morning? How about Blue Owl getting, stopping redemptions? I mean, that's telling me everything, right? Blue Owl, OWL, pull it up for everybody here so you can see what I'm talking about. OWL down almost 7.5% now on CNBC. You can see here, there's a 1 hour chart, absolutely getting crushed over the last few. And I have not liked it. People asked about the Blue Owl. I did not like it. Yeah. Look at that. The deal to sell $1.4 billion in loans to major pension insurance investors. There's a reason why you sell loans like that. It's because you're out of capital, and no redemptions mean they're even holding your money that's not even theirs. That's a really bad situation. So be careful out there. Yeah.
Let's
Hood, Robin Hood. Also, look at that. Robin Hood also was this is a 1 hour chart. If you look at a 1 hour chart on Hood, can anybody tell me what's happening right here in Hood? This is very simple. We are flagging, folks. There's your flag. And that's what they're trying to do right now, pinning it. I do like Robinhood here. I think they got beat up for no reason over the last few days. And I took advantage of that. And, of course, making money off of it. But I'm saying long Robinhood. I kind of like what they're doing. Look, I know Vlad didn't help himself with his comments the other day. Probably need to stop, stop talking a little bit because it's important because people do listen to what he has to say. And he's got quite a following. And I like what he's doing. I've always liked what he's doing. But the other day he said, his number one thing is building a chat site. Well, okay, good for you. I don't know. I mean, there's bigger things you need to be doing with your company. But Oracle now up again. Once again, Oracle now up 150 now. So that little blip to the downside you saw, right back up. Look at that. Look at that. Boom. I think we pushed right on up. Amazon now pushing right back up, 204 now share. IBM only down $3.50 now. Yeah. I'm not sure who was selling the IBM. That was kind of dumb, folks. It was internally. I don't know. But I can tell you that that was stupid. Yeah. Do like it. Yeah.
It's down to about 1.5 points. Well, it's not bad. I mean, IBM is it does a lot of stuff, which is interesting because some companies only get like they focus on one thing, but I feel like IBM has like a little bit diversified in terms of some of the stuff that they've been doing lately.
Yeah, and
I'm curious to see how that's going to play out for the company in terms of, at least that's what I'm hearing. So that's what I'm trying to figure out. What's your big takeaway on IBM? Why you're so?
Well, I mean, obviously Watson and Watson Next to me, I think is definitely they're a big player in the healthcare industry, and I think that's one of the biggest places that we're seeing it, right? So I do like. Oh, look at this! Look at this move here, IBM. It is pushing up here, 257.65. We might at 257.80. We might actually go positive on the day here. I'd like to see that. And look, you're talking about AI. They're the mainframes. 204.36 now on Amazon here as we push right back up. As the Qs are trying again for the tops here. I think the selling was stupid here to me. Wow, it is very stupid here. Look at this. I'm liking this move.
I'm liking this move pushing up. Wow.
Yeah, let's go. Let's break at 205 earlier this morning. I think we really got a run here. The Q's now 603.23 now, trying again here, pushing up again. I'm saying just ignore the noise, invest in good companies, and you'll do okay, right? This is what we're trying to do. Oh, I don't want to do just okay. Well, 80% of retail traders lose money, folks, okay? We're here to help you to do that. We want to help you become a better trader and a better understanding of the markets. So Amazon about to go green here, I think, again. 204.36, 204.36. Let's see if we can get them green here. And Bitcoin 66.3 now, so it's also pushing back up. Oracle, remember how Oracle was getting beaten up this morning? Right back on up, right? And I didn't do anything. I bought more Oracle down on these dips. I'm liking this dip buying here. I saw a lot of people over the last few days saying, "Oh, dip buying is dumb. Dip buying is dumb now." You're on the outs, folks. If that's what you're not thinking, right? Because dip buying is what's happening right now. But you also need to learn to take a profit too. I think a lot of people don't understand to take profit sometimes. And how do you balance when to take a profit and when not to take a profit in your own self?
Well, for my personal self, when that happens, I say, okay, am I happy with where it is right now? And I try once I sell to not look at it for a day, because I don't want to say, you know what? Oh, I like if it keeps going up, I don't want to have that thought in my mind I could have had more. So once I sell a stock, I don't look at it for that day no more, unless I'm going in and out. But that's rarely the case. But like if I take some profits, I'm like, okay, that stock is done for me for today, because if I look at it again and it's you know, it skyrockets, it's gonna mess with me with my mental aspect, and that's why I
And
say
you take it off. You like me, you take off your watch list, right? Like I like for silver when I hit the big short on silver and crushed that, and then I bought it back in, and I got those 2 trades done. I just wipe it off my watch list. It's not even on my watch list or on my. I mean, I don't even look at silver right now. I just did for the first time in 77.93. I don't even care, right? It's like we beat that thing to death. Right now,
Right.
now people are just racing at this point. Qs are still pushing higher here now. Qs now on the highs of the day here. Yeah, definitely looking good here. Amazon now. Look at this, Amazon,
right
baby.
there.
Come on. Baby. Yeah,
It's right there.
204.42. Let's go. Let's go again, right? We see where the sellers are now. We know where they're packing them up. 205 is where they're packing at. It's fine. Let's see if I understand that, and they're probably going to flag a little bit today, so that's okay too as well. But I this could be a melt update to me. Yeah, Qs are pushing up here a little bit. Robinhood now up 0.6. Yeah, look at Oracle at $2.40 now. I didn't do anything with Oracle. I just bought more, right? Yeah, I like this.
Wow. It came back heavily there. Oracle did, yep.
Yeah, I mean it's the dip buying mentality, but I've also been buying stocks that have been beaten up pretty badly too, right? So, you know, that's another key to Oracle for me, and I felt like it was beaten up pretty badly. If you look at a monthly chart on Oracle, and I'll just do it real quickly for you so you can see it here. That's what I was seeing, right? That this was looking like, and you can see where my lines are. I'll build another line for you so if you can understand. This is exactly what I saw. And that's why I bought Oracle on that dip there. These are monthly chart here. And I felt like this was turning as well. I know there's a little bit of selling on the top there. But if you look at a weekly chart now, the lines are right there. So it gave me a very clear sign of when I should be buying Oracle. And I like this. I took advantage of it. And if you remember out on the floor of the New York Stock Exchange not too long ago, I was telling Carolyn Woods that I didn't like Oracle, right? And I was right. Come December, January, and Oracle fell back. But Oracle's making some changes, right? They are getting a part of this AI. Okay, 204.70 now here on Amazon. Where it is trying again here, folks.
Yeah, I mean, I think it'll go positive. The way it's gonna go, it's pushing.
Okay, it's pushing. Let's see if I was right here. I think 204.73. We're pushing 74. 204.76. Let's go, right? Let's go. Oh, come on.
Yeah, let's go. I mean, there we go. It's
204.90 now.
Let's see if it's gonna break 205. That's the big.
It just hit 205 once again. Let's see if we can get above those numbers here and break that. There is a big sell signal up there. I understand that, but it seems like there's some buyers in this thing. The Qs are now on the highs of the day. IBM only down $2.80 now. A Hood up almost $1 now. Oracle up almost $3 now, folks.
It's facing some resistance at that 205. It had a little pushback now, but I mean, it's for
Amazon, the run
at still.
But yeah, the Qs are also doing the same thing. Also getting a little bit of selling, and that's exactly right. 66.6 now on Bitcoin here. Another run here now on Amazon. Let's go. 204.95, 205.02. Another high as 205.04.
There you go. 5 to 10. Okay, yeah.
If it could break, it will go, and it did. Look at that. Q's now pushing here. $205.14, $205.12. I love this. Have a thesis, understand what you're thinking about, and do it. Build it. Don't worry about what the world's doing. I know that there's some pressure out there from Iran. I am concerned about Iran. But now that we have a little more clarity that maybe the war will come to our shores, then okay. I think people are saying that, right? But
and what do you mean by come to our shores?
I don't want to see bombs on our shores, my friends. 205.16 now on Amazon. The world's largest company is now growing bigger.
Yeah, there we go.
And the Dow is only down 100 points, and the Nasdaq only down 25. So we could go positive here. Oh, 3 minutes now. 2 minutes on the top of the hour.
Yeah, just a couple of last remarks here. I think that, originally today it kind of started off very quiet and all that, but now it kind of had a little drawback right here. Amazon, I'm looking at it right now, but I think it might be, if the push continues the way it is, I mean, it might be a little positive day here overall, because a lot of stocks are, with the open, they get that influx of volume, and then you see, and that's the hard thing about the pre-market. You can't really, you get an idea, but then when the influx of volume comes in at 9:30 when the market's open, you see like those jumps, and you're like, okay, well, I was wrong today. But you can never always get it right. That's
and I think for some of you that have been asking me about Oracle here, man. I got to take my profit and run, my man. That's I did. I took my profit and ran on Oracle, sold Oracle. That's it. Sold all my Oracle. Gone. Taking advantage of that. We are seeing some sign now. About 4.3% is what I took on profit on that.
That's
over
good.
The last couple days. Yeah.
It doesn't have to, not everything is a home run, but you know what? Those little things add up.
That's right.
And that's the key to it. It's longevity. It's not one time and you're done. It's being there for the long term. That's the thing about the markets. And I think nowadays with instant gratification, people don't have the patience to wait for that long term.
You mean like 3 days? Yeah, they can't wait 3 days. I was out.
Yeah.
I was looking at the markets, and I was out in a restaurant. The guy was like, "Oh, you trade?" I'm like, "Yeah, I trade." And I'm waiting for somebody to ask, for a stock tip. What's up? I'm so used to, everybody knows I'm so used to that.
Yeah.
But because I can't hold more than an hour. I'm like, what?
Yeah,
more than an hour? No, I can't handle more than an hour. I can't handle more than an hour. Wow, that's really bad. You need to understand that sometimes, as Warren Buffett would say, if you can't take a 10% loss, then you shouldn't be in the markets in the first place, right? If you can't handle that, yeah.
And notice that's the thing. One last thing. They said, Warren Buffett, he said, my strategy is not that hard. It's just people are not patient to follow it. So, I
think one of the things that Warren says best is the stock market is where money transfers from the impatient to the patient. And we'll leave you out there right now. Quasar Rice Live, thank you so much. Good numbers today. A lot of people watching. Make sure you repost and click that live and subscribe. And we love you here. And welcome aboard, man. I'm looking forward to a good run here with you and me once again. All right, for those of the Quasar Markets Live, we'll see you a little bit later today.
Of course.